Dr. Babasaheb Ambedkar Open University.
Hello friends, I am Professor Manoj Shah, Professor and Director, School of Commerce and Management, Dr. Babasaheb Ambedkar Open University, Ahmedabad. I am an instructor of the Fundamentals of Financial Accounting course, and I am welcoming to all the participants and enrollment students in this particular course. See, today we are actually discussing the first module on the subject of Fundamentals of Financial Accounting, that is the introduction of financial accounting, where we are discussing what is the accounting, what is the history of accounting, what are the planning of accounting, needs of accounting, characteristics of accounting, importance of accounting. Is there any science and arts along with this accounting system? So these are the topics which we are going to discuss in this topic. So now let's begin with the first thing here, that is what is the awareness of accounting and how the accounting comes into the picture. What are the importance of accounting? So in ancient times, when we are thinking about the around 600 years back, at that point of time, that generally accounting needs were not that much important, that much created, because of the people were doing the transactions through the barter system. So the needs are very limited, the requirements are also very limited. So the people were actually exchanging their products and their goods with the another person who needs their certain kind of products, and those are the transactions which are very easily memorized by them, which are not necessary to records, and that's why the accounting were not comes into the picture. So in the ancient times, most of the time the transactions were not recording and not required to recording in the books of accounts, because of it was in a barter system. Then gradually the civilizations has actually grown, and after the growing of the civilizations, the transactions were increased, the populations were also increased, the number of products were also introduced more and more, the requirements are also increasing more, and that's why the people needs are also increasing more. In those reasons, the people were actually buying and selling their products not only the nearby of their area, but also they are trying to sell off their goods from one place to another place which are very far away from those areas. But in those reasons, that is why the transactions were extended, and the transaction needs to be actually identified in such particular manner that the common instruments has to be introduced, and that common instruments were considered as a money or currency or certain things. At that point of time, through growth of civilization, the money or a currency comes into the picture, and the currency were actually used for such kind of transactions. In the modern business, which we are actually think about it, in the business scale was actually increasing in a larger part or larger, then all these transactions needs to be recorded somewhere. Why? Because of the transactions numbers were increasing in a larger manner, and then all those transactions cannot be memorized, and that is why the transaction has to be noted down somewhere. In those reasons, the account, or it has to be recorded somewhere in the books of accounts. There the accounts comes into the picture. The accounting is not actually introduced in the way of accounts, but it was introduced in the way of the recording transactions somewhere in the books where it can be memorized by the people. So this is the way of the accounts comes into the picture. Here the person is actually in front of you. That is basic introduction about the person is the person Luca Pacioli, who was actually written something about the accounts first time in his books, one of the book, where he mentioned about the recording transactions in the certain page of paper or maybe the certain books, where all the transactions can be instead of the memorized, it can be written somewhere, then you can recall it and you can ask for the certain things. So that is why the accounts comes into the picture. Here, the what is accounting? Now, accounting is all about that recording a transactions, and the recording a transactions which has to be recorded in such a way in the books of accounts which can be converted into a monetary terms. So those transactions which have a value, which are converting in a monetary terms, can be recorded in the specific books of accounts with reasonable art and science, and then it has to be classified properly, summarizing also, and at the end of the summarizing a transactions, it has to be interpreted properly, which can be helpful for the management, and those are those stakeholders who are directly or indirectly involved with this particular uh, business or a particular transactions. So this is what all about accounts. But here the specification is, what is recording? The recording, it means the transactions which has to be recorded some books of accounts in some accounts, which is called a journal book. Then the journal book has to be recorded maybe in a multiple way, because of there are many kind of transactions, or maybe all the transactions cannot be recorded in the journal book. Then the requirement of, instead of the journal book, there are some subsidiary books also, so that is also a part of recording. Then all the transactions after recording, it has to be a classifying, so then you need a ledger. So why you want ledger? Because of it has to be classifying. I want actually account wise information. So how much total amount of purchases is there, how much total amount of sales is there, how much amount of assets I carried in the business, what amount of bank balance I have, what amount of cash balance I have, how much creditors goods sold but the amount were not received, how much amount of goods purchased which has not been paid till today. So this, the balance can be need to identify. This is called the classifying. Summarizing, after the classifying all this, we need to find out the balance of each classifications, and then it has to be recorded in a trial balance. Then it has to be identified, the trial balance to be recorded in a different kind of statements, the statements of finance, that is called the financial statements, which has to be divided into a certain parts, can be identified through the trading account, profit and loss account, and at the end of the statement of a balance sheet, which is called a position statement. So this is all the summarizing of the accounts, and at the end, after all the summarizing of these accounts, we need to interpret it also. That is called the interpretation of the accounts. Why it is required the interpretation? Because of the summary is actually not giving in a position of the company, or may not be able to take a decision from the summarizing of accounts, but it has to be interpretation in such a way that the management can take a further decision, or the owner of the business can take a decisions on the basis of the current position of the business. So this is what all about accounting. Now moving to the next point, this is what the need for accounting. Why we need of this accounting? The need of accounting is to understand that a basic requirement is where, what is the object of the doing all this transactions, what are the main motive of this business, or maybe the transactions. The main motive of this transaction is to earn a profit, so that at the end of the transaction, the company or maybe the owner of the business willing to know that whether at the end of the transaction or at the end of the certain period, whether they earn a profit or a loss. So the position has to be identified on a certain intervals or a certain period, can be evaluated through these statements. So that is the basic need of accounting. So to find out the profit or loss, exact amount of profit or loss at the every interval, this accounting is required. To know the financial position, to financial positions can be evaluated through the classifying the all the transactions. After you are classifying all the transactions, then you prepared a statements. The financial statements is actually showing you that how much amount of purchase is done in the specific period of time, what would be the sale amount, and then so the all amount, purchases, sales, different kind of expenses, how much amount of assets you are carrying, all the different type of assets you have, what amount of investments you made in the business till today, how much amount of investments is actually getting a return out of it. So all this is called a position of your business. So that financial position of the business you will evaluate at the certain period of time. Also account transactions of account has to be evaluated, and that is why all the transactions is recorded in the books of accounts. Then also it is required for the compliance, different kind of compliances. Why? Because of when you are doing a businesses in the present scenario, there are so many kind of a different kind of compliances also put it by the guidelines, or maybe it has been actually imposed by the governments. So like if you are doing a business, then you have to pay of a different kind of taxes like a GST, or maybe a sales tax, or maybe octroi, or other kind of a taxes. So that taxes has to be paid in these transactions. So how much amount of taxes you need to pay, that you can evaluate through the transactions has been recorded in the books of account. At the end of the year, when you earn a profit or loss, then also you have to identify the what amount of tax liabilities you are going to pay for that. So that is also has to be evaluated. Certain period of time you need a certain licenses also. Which kind of business are you doing? Which business is required? Which kind of licenses? That also you need to identify, and evaluation also required certain entries. So these are the minimum compliances and the tax compliances which you are actually required, and that is also one of the need for accounting. Then next is legal proof, the existence of the legal proof that you are existing, that the particular type of existence and supplying, and as well as the submission of your presence through your transactions has been actually recorded in a certain books of accounts, where you are actually submitting your accounts to the person who asked for it, whether the banks, or maybe the stakeholders, or maybe the all kind of creditors, or maybe the government or other people, where you are preparing an accounts and submitting the accounts at the time of when they actually called up. So this is all requirement and need for accounting. Moving to the next point, that is the characteristics of accounting. The characteristics of accounting is actually based on their definition. So what is the definition of actually accounting? The definition of accounting is, the accounting is all about is art and science which has been evaluated of financial transactions which can be converted into a monetary terms, and this has to be recorded in specific book of account, where we classifying according to their norms of accounting principles, as well as it has to be summarizing, and it is to be interpreted for the management requirements. This is what all about definition of accounting. Various associations and the people were actually giving the definition of accounting, and that all accounting definitions, on the basis of all accounting definitions, we identified the few characteristics of the accounting. Now, starts with the first is art and science. The accounting is art is all about, it is actually a recording a transaction is art. Why it is recording is an art? Because of ultimately art is all about the how you are a creative to write in accounts, how you are creating into the record the transactions in the books of accounts. So ultimately this is all about art. So need to identify the transactions, it has to be recorded in the books of account, and not only the recorded, but it has to be actually classifying also. So then all this transaction has to be recorded as per the evaluation of the basic terminology, that this is an account and this is accounting transactions which has to be recorded in the books of account. What is science? Science is actually it's considered as a part of a certain legal perception. That is, it can be said that there are certain understanding that these are the standards, and on the basis of the standards, you have to follow the rules and regulations and doing certain activities. So the same way in accounting also, there are certain rules and regulations which can be considered as an accounting standards. So as per the accounting standards, these all accounting transactions records in in the books of accounts. So there are some rules and regulations which is considered as a science. So that's why the first characteristic is art and science. This is for accounting. Next is financial transaction only. So only financial transactions can be recorded in the books of accounts. I'll take both the characteristics together, that is financial transactions and money terms. Why I'm taking together? Because of ultimately the transactions which are converted into a monetary terms, or maybe those transactions which are evaluated in financial value, that is considered as a financial transaction. So those transactions which have a value or which can be converted in a value, or there is any possibility of exchange of money, that is considered as a financial transactions. So those transactions which has a financial value can be recorded in the books of accounts. Those transactions which does not have any kind of financial value or which cannot be converted in a monetary terms cannot be recorded in the books of accounts. So that is the another important characteristics of the accounts. So in that sense, if any kind of a transactions which are just doing for a help or which cannot be converted in a monetary transactions, or maybe any kind of financial exchange would not be possible in those transactions, is not considered as a financial transactions, or it cannot be recorded in the books of accounts. So this is the important things. Then the money terms. Money terms, it means that those transactions which have converted the value in a certain value. So amount has to be identified. The transactions are there, but the transaction needs to be converted in money value also. So if it is converted into a monetary terms or in a money value, it's come money terms. Classifying those transactions which are actually identified, it's a financial transactions or in a monetary values, which needs to be classified in a different way to identify that the how much amount of purchase is made by the company, or how much amount of the sales is actually doing by the person or an owner or a company. So what amount of asset is carried by the company. These assets is actually carried through their investments in the form of capital, or whether the amount has been borrowed from the banks. So how much amount of assets is actually contributed by the owner's capital or the borrowed capital. So this all the things has to be classifying in the business. Through these classifications, you can know the amount of the each individual accounts or heads. So this is why the classifying is also required. Then it has to be a summarizing. The summarizing is actually important to, after the ledger posting is done, then each ledger account has to be identified the what is the value of the ledger accounts at the end of a particular interval, or at the end of the year, or at the end of the specific period, and the amount of that particular ledger, it's actually recorded in a trial balance, or it has to be summarizing properly. Then that all the summarizing of a ledger balance to be entered in a financial statements, in a different kind of financial statements like a profit and loss account, or in a position statement like a balance sheet. So at the end of the specific period, the company or a person or the who are doing a business will able to understand that what is the position of the business at the end of an interval after the summarizing of business. And through this summarizing, the person is able to know that whether the company or a business is actually earn a profit or a loss, or that amount of profit or loss, how much it is impacted on your capital, whether the assets has been allocated properly or it has been utilized properly. So all these things has been actually evaluated through the summarizing of the business. At that, after the summarizing of the business, then the need of interpretation of the business, the interpretations which helps to the management, or maybe the owner or the person who is holding this business, is required. Why? Because of the interpretation is very important after the summarizing of business. The summarizing is the actual position of the business. So till then, the what was the actually position of the business, what are the transactions as takes place, after the transactions what was the position of the business, now what we can take in future, how we can move further decisions, how it can be helping out to do a better situation of the business. That is an interpretation of the business, and the interpretation of the business requires the proper analysis of the summary of your position or a summary of your financial statements. So after the summary of the financial statements, the management or the person or a owner who is interpreted in a business properly or a financial statement properly to take a further decisions in future, that is the interpretation of the business. So these are the all characteristics of the business. Now moving to the next point, these are the objectives of accounting. So in objectives of accounting are like a systematic records. See, ultimately the systematic of records is all about that any kind of transaction has to be recorded systematically. It's a first main objective of the account. Why? Because of ultimately there are few things which is very important to understand the systematic records. First is to understand that only financial transactions to be recorded in the books of accounts. That is mandatory. Second important thing is it has to be recorded in a proper journal book. So whether you are preparing a journal book, if you have a more number of transactions, then all the transaction has to be divided as per their characteristics and prepare a subsidiary book, and that has to be recorded in a subsidiary book. So why we are doing this all transactions to be clarified or classifying? Because of we want to actually help to the management and need help to understand it, the any kind of economic or a monetary transaction cannot be omitted or forget the transactions recorded in the books of accounts to avoid such kind of fraud. So that is why the all transactions should be recorded systematically in the books of accounts. As we discussed earlier, that is there is art and science. So why we discuss art and science? Art is it has to be recorded systematically in the books of accounts. That is art. Why? What is science? The science is all about it has to be recorded on the basis of certain principles, certain rules and regulations, right? So certain standards are there. So on the basis of accounting standard, it's recorded in the books of accounts. So that's why the systematic recording it's more important. The second important objective is to know profitability. Every businessman is actually having a main motto and main motive is to earn a profit. So at the end of this particular period, whether the company earns a profit or loss, that you can actually identify at the end of accounting period. So that is again the another important objectives to know the profitability, whether the company earns profit or a loss. If it is occurred a loss, then what amount of loss they occurred, whether it can be converted into a profit or not. So that is actually getting informations through the accounting. Next is to know financial position. As I already discussed in the previous slides, that is summarizing of accounting. Summarizing, it means at the end of classifying, we are preparing trial balance as well as the financial statements. The financial statements is all about helping to understand the how much amount of profit or loss and what will be the position of your business. So this is called the financial statements. So at the end of this particular accounting entries or record, for the certain period of time, you will able to know that the what is your financial strength, what is your financial position on the particular date. So whether the assets is invested by you, or maybe the how much amount of capital you invested by you, what amount of actually you have a liability, how much amount of assets you are carrying, amount which you are already sold goods to the your customers, where you are actually the amount has not been received till today. So what will be the receivable amount? All this position you will able to know from the financial position. Then the progress tracking. Progress tracking, it means you can compare your financial statements year on year. So if you are preparing a last year balance sheets, and then you can compare the current year balance sheets, the data, and then you can take that the last year your capital is that much, this year your capital is this much. So whether the capital has been increasing or decreasing, your assets has been increasing or decreasing, how much amount of your capital invested in your assets, whether you borrowed the loan during the year or not, last year the borrowed amount is there or not, how much amount of profit you earned last year, how much profit you earn current year. So these are the comparisons. So ultimately this progress tracking you can understand, and you can identify your progress movement also. The next is fraud prevention. If this is again a very important transactions because of as we discussed in the last slide, that the one of the thing is compliances towards the government or your stakeholders. The fraud prevention is also directly related with that. Why? Because of there are so many things were happened. The people were actually doing mischiefs, or those who are not intellectual of writing an accounts properly in the books, they might forget to record such entries in the books of accounts, or maybe if they don't know the proper principles of accounting, they might actually doing a wrong accounting. So we want to prevent such things, and that is why if the any kind of systematically accounts record in the books, it has to be maintained with the accounting standards, with proper systems, when all entries has to be recording in the books of accounts. So fraud preventions can be helping out through the transactions identified, and systematically it has to be recorded in the books of accounts, which can be helpful to the management or owner of the business against the fraud. So this is what the fraud prevention. This is also one of the important objectives. One is the important information sharing. Information sharing with whom? The person who are directly doing a business. So the person who is owner of the business might get the information. You, if you want to take a loan from the banks or some other creditors or some other people, or the people who want to dealing the transactions with you, also they need your information, whether this business is doing well or not. Maybe the government, whether you are paying a tax in time, or you are paying all these taxes as per the norms or not. Also they need all your accounting information. So this is also the information sharing with the other people. So all these are the objectives of accounting. Moving to the next point is functions of accounting. Functions of accounting, like record maintenance. Record maintenance, it all the transaction has to be records in the books of accounts without any mischiefs, or maybe any kind of transaction should not be missed out. So it has to be recorded completely. Like first is it has to be recorded in journal book, then it has to be recorded, if it is subsidiary book, then also recorded in subsidiary books, then it has to be classifying, then it properly summarizing, that is the ledger posting done, then you have to prepare the summarizing and prepare the financial statements. So this has to be prepared in a systematic way. It's called record maintenance. It has to be communicated to all the people who are actually directly or indirectly involved with the business, or your performance has to be evaluated by so many other people, like a bankers, like a governments, like an institutions, like the people who are investing in you or your business. Like this is to be communicated with the people. Asset protection, it's all about the how you are actually recording all transactions and try to controlling of all this. Because of if you are going to record all these transactions in a systematically way or properly, then you can actually try to control also. Because of if you want to understand that the amount of assets is actually utilizing properly or not, through these transactions you will evaluate that the amount of assets has been utilized but not an optimum utilizations, then you need more and more focus on that, and then you can actually identify that the more amount of growth can be identified through this. So asset protections also through the proper understanding. And management support, it means all about the timely informations to be shared with the management or the people, and it has to be getting the informations to the management properly to take a further decision for the future prospects, or maybe any kind of a budgetary allocations or budgetary informations to be prepared for a future aspects, that also need the informations timely shared with the management to take a further information. So this is all about the functions of accounting. Moving to the last part, that is the science or art. As a science, as already discussed earlier, that it has to be a systemized body of a knowledge based on the principles. So all accounting transaction has to be recorded on the basis of certain accounting principles or certain accounting standards, and which is helping to the person who is actually acquiring a knowledge of accounting. They can learn what are the standards and what are the principles. On the basis of that, the accounting has to be recorded. But here I just want to tell you, the accounting is all about only recording. where it has been accountancy is actually having a broader area. Broader area, it means accountancy, it's considered in not only bookkeeping, but also including summarizing, classifying other things also, where it has to be interpreted also in such a way. What is art? Art is all about actually enabling a reaching goals in the best possible manner. So ultimately, you need actually certain type of the desired objective. My main objective is that transactions should be recorded in piece of paper or maybe in a book. After the recording, it has to be, because of say all these transactions cannot be memorized, but if I'm going to write all these transactions in the books, so at least I can evaluate it and I can memorize the things. So this art of recording, classifying and summarizing the transactions, which will be helping out me to understand and to evaluate, to take a future decisions out of the memorizing and summarizing of the same. So this is what all about the introduction of accounting. All my friends, this is what all about I want to explain for the first module regarding the fundamentals of financial accounting. I hope you will be able to understand through all these topics and it will be helping out you for the same. Thank you so much.